Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the trade setup of the day today. We'll also be chatting with top market experts to guide you through the newer strategies that you should be adopting in trade today. And of course, all the factors that will be important to track as far as what could lead the market momentum from today onwards as well. Remember, as of yesterday, we've had 4 to 5 days of positive move on the Indian stock markets. In fact, what we have seen is that the Indian markets have made the longest winning streak in a month with these 5 days of gains coming in. Yesterday, the Nifty reclaimed 24,000 mark. The Nifty bank crossed beyond 55,300 mark as well. And the banks continued to lead the gains, pushing Nifty bank to a new record high as of yesterday. Now remember, the Nifty index has also risen by more than 2,400 points from the recent low of 21,743. Of course, as we move into today, markets' attention will be again on the earnings reports from heavyweights like HCL Technologies, then also M&M Financial Services, Havells, AU Small Finance Bank, Tata Communications, Wadi Energies, and Science DLM as well. Remember, although we will also be keeping an eye out on how the global markets really shaped up overnight and this morning to help us understand what kind of a trade do we expect in today. The US stock markets fell again on Monday as President Donald Trump ramped up his attacks on Federal Reserve Chair Jerome Powell, raising questions about central banks' independence, while traders received little signs of progress on global trade talks thereof. So we did see across the board a sea of red on Wall Street, about 2.4% of a loss for the Dow Jones. S&P 500 also fell by 2.5%. We also saw the Nasdaq Composite declining by nearly 2.6% odd in trade as far as yesterday's trade is concerned. Of course, this morning Asian markets also felt the heat of the US markets and they opened largely in the red as well. Even the GIFT Nifty is now indicating to a start on the negative note for the Indian stock markets. When we look at Hang Seng and Nikkei, they are the ones that are feeling some heat. China and Kospi, although, are just minor positives at this point in time. 24,177 is what you could see the Nifty open at, is what is being indicating from the GIFT Nifty trends as well. In terms of stocks that you should be watching out for, many of them will be important to track. First up, it will be the IT stock HCL Technologies. Remember, the earnings will be coming in today, and here the net profit is likely to decline. In this March quarter, as per the expectations from most of the analysts, a weak environment of demand is something that is likely to weigh on. Revenue, however, is expected to rise marginally on a sequential basis. We're also going to be seeing EBIT and EBIT margins also slightly on a softer side. Of course, the key things to watch out for here will be the impact of the macroeconomic environment, commentary on discretionary spending, the margin levers, deal pipeline, and the conversion ahead as well. In terms of other stocks, HUL is going to be in focus. It has completed the acquisition of 90.5% stake in Uprising Science for 2,700 crores. Brigade Enterprises will be in focus. It signed a joint development agreement, development in Malur in East Bengaluru, spanning approximately 20 acres. The gross development value of the project is 175 crores, so we'll keep an eye out on that. Tata Power will be in focus. Its arm, Tata Power Renewable Energy, has signed a power purchase agreement with Tata Motors to set up a 131 megawatt wind solar hybrid project that will be in focus. Coal India will also be in focus today. The state-owned company has partnered with Damodar Valley Corporation to develop a 1600 megawatt ultra supercritical thermal power plant in Jharkhand. The total development investment will be to the tune of 16,500 crores. So big investments going there, and that will be important to watch out for as well. Of course, apart from this, a whole host of brokerage houses updates will also be in focus. We'll keep an eye out on Chola Investment and Finance. CLSA has downgraded the stock to hold with a target price of 1600. On the consumer sector, Goldman Sachs has come out with a report. They see fewer catalysts that could trigger a gradual revival in consumption growth in FY26, although their preferred stocks are Godrej Consumer, Tata Consumer, Marico within the consumer staples, and Titan and Trent where market share led growth can continue going forward, and also Pidilite in some of the ideas that they are banking on. Banks will be again in focus after yesterday's record high moves on some of them, leading to Nifty Bank also touching record high levels. The LCR norms have been eased, and that's something that we will be looking at as well. Steel stocks will also be in focus. The government has imposed a 12% safeguard duty ad valorem on non-alloy and alloy flat steel products. So that will also be in focus as well. There are many, many talking points that we need to discuss with our guests. So let's welcome on board our first guest of the morning. We have Mr. Dharmesh Kant, Head of Equity Research at Chola Securities, joining in. Warm welcome to you, Dharmesh ji, and thank you so much for taking the time out. Well, finally, we are seeing bulls probably taking their own, claiming their own ground. Finally, we have 24,000 back on the Nifty Bank at record highs. I mean, we don't even remember the last time we were talking about record highs on the index levels. It was that kind of a pain that we actually saw in the recent times. Tell us what's the sense that you're getting, because globally things still are on a dicey footing. What's happening between the US president and the federal chair is something that is again being seen as a big overhang as to what it could really mean for the global markets at large. Indian markets still seem to be, on a better footing at this point.
Yeah, good morning, Sakshi. Good morning to all of viewers. See, this market is all about relative comparison. Even in earnings, you compare the companies relatively, which is going to do better. And then the valuation multiples are all assigned. So right now, in the global context, though the things are murkier, there is no certainty about how the flow would be or the global trade rebalancing, resetting, because there are a lot of things which is happening from China. I mean, they're white labeling their goods to other countries, which they have stopped now. So they are saying they would be, instead of white labeling, they would be labeling their own brand. So let's see how those scenes emerges. As far as US is concerned, I mean, Mr. Trump is very clear that anybody's and everybody's freedom is subject to his approval. Your highway kind of a philosophy is being, doing the rounds in US, and that is what is creating all this problem. So equity sell-off, which we saw yesterday because of Mr. Trump's direct remark that if Mr. Powell wants to go, if it's his wish, whether he wants him to continue or not. So these are, very strong statements that too coming from a world leader or a trendsetter, earlier erstwhile trendsetter like US. So people don't expect that. And anyways, any regulatory authorities, if independence is under the subject of a political person, it definitely arises cloud on the overall span of things. So that is where US selling is happening. In this entire context, I think India stands on a bright footing again. Relatively, it is better off. Even if there is a slowdown everywhere, India won't be hit the way, I mean, the US will be hit in the near term. Though in long term, I do believe, this is my personal opinion, that finally US is going to benefit from whatever it is doing as of now the most. But in the medium term, it is, I mean, there are many other countries which will be better off than US, and there India stands on the bright spot. So that is continuing. Earnings so far has been divided. I mean, if you scrap the IT sector, you just leave that, then the earnings have been pretty good so far in Q4, and this is coming on the backdrop of interest rate cut by RBI, accommodative monetary policy, chances of rate cuts as inflation is easing down. Monsoon forecast has been good, so as above level monsoon which has been expected, and the tax cut benefits will now start kicking in from April onwards when the salary paychecks come. So all this put into place, I think we will continue to trend higher. Any declines is likely to be bought into. Just be bit careful about the sectors or stocks or companies you are investing into, and where the government of India is the revenue driver. Those are the sectors where you are better safe than other riskier companies.
Absolutely. I wanted to first discuss about the banks with you, but let me just quickly point out at what the pre-open indication is on the Nifty and the Nifty Bank. You're looking at 55,304 on the Nifty Bank as of now, and the Nifty also is at this point in time indicative of a flat with a positive opening. Let's see how that one ticks higher. 24,273. Yes, there is a 0.6% of an uptick that we see on the Nifty in the pre-open trade. 144 points, kind of a move on the higher side. That's not too bad at this point. Let's hope that this continues for the better throughout the course as well. A 500 point of a tick on the higher side on the Sensex as well. That's also moving on the positive side as well. And the Nifty Bank too, opening on a higher note. So let's hope that this continues for the better despite the weak global cues that we actually had. This should not really deter the investors at this point in time. But banks is something I wanted to start off my discussion with because those were the heroes of the day yesterday. And, of course, the Nifty Bank really came in to show that all the consensus estimates that we had been discussing from the start of 2025, this year, when everybody was mentioning that banks and financials are your safer havens, this is the space to be in. Finally, the stocks are moving higher. They are actually taking the baton in their hands too. And now we have another trigger. As of evening, we have the RBI LCR guidelines that have come in as well. I mean, brokerage houses are also looking at this positively. They believe this LCR relaxation might boost the profitability by 1 to 4% of the banks as well. And they will be, of course, implemented from April of 2026, but they should boost, the bank's profitability more than what was seen in the draft circular. What exactly is your viewpoint when it comes to banks, particularly banks, financials at this point in time? We saw private, PSU banks, financials full throttle yesterday.
Yeah, I mean, earlier when the market was correcting, they didn't correct that much, so they were relative outperformance. Now the absolute price movement is also started happening in the banking space. ICICI Bank was the leader out there, it was already at all-time highs, and public sector banks have started catching up. So just pure on the valuation metrics, if you look at in the entire, last year growth numbers which these banks have given, public sector banks have actually performed better than what the private sector banks were. Earlier, 1920, anywhere between 18 to 25% was the advances or loan growth for coming from the private sector banking space, and public sector banks used to languish around, say, 7, 8% to 11% kind of advances growth, which has changed. I mean, you have seen the number of ICICI Bank advances growth has fallen below 15%. Private sector banks have been, a bit slow as far as the advances growth are concerned. But public sector banks have been, lapping up the opportunity. And the best part is actually the asset quality has not deteriorated. In Q3, there was a concern because of microfinance sector, slipping, a spillover effect on the entire asset quality, which has not happened. The asset quality has remained intact. In fact, it has been a bit better off on the numbers which have been reported so far. So they, I think, in the liquidity measures and the RBI measures are going to help the profitability. No doubt about that. Even the NIM compression, which was expected, with the deposit cuts being, done faster than the lending cut, I think NIMs are also likely to improve 3 to 4 basis point going forward. So these things augurs well. Valuation wise, they are still, not that expensive. As far as public sector banks are concerned, they are trading at their mean levels. So, to my mind, if you are invested into a public sector bank, you are better off on absolute return, relative return. For private sector banks will also go up, but public sector banks will be better off. And there, the best idea is to play as a basket thing. Maybe, Bank of Baroda, Canara Bank, SBI, PNB, and Bank of India, all these five banks, if you put in a basket and play it out. So maybe 2 years down the month, sorry, 2 months down the line, you'll find a better returns. So, and as far as LCR is concerned, that's a far-fetched, call. It's still a year away, though sentimentally positive in this positive environment, which is, doing the rounds. So what we are advising is more of our public sector banks to our clients compared to private sector banks. If you are having it in your portfolio, please continue to hold them.
Absolutely. Okay, so continue to hold the private sector banks. That's the view that's coming in. We'll in fact come back to the banking discussion in a bit, but I need to mark for all our viewers the price of gold. Price at this point in time. Let's pull up MCX gold for all our viewers to see. 98,750 rupees per 10 grams is what we have on MCX gold as of now. Dharmesh ji, What exactly would you say for gold? We've been talking to a lot of gold experts as well who've been saying that, of course, they do not rule out a 1 lakh rupee mark, but this is not the time to really go out and buy gold at these skyrocketing, higher prices, dizzying prices of gold. But seems like, most of the investors are getting in an absolute FOMO mode. Despite that 32% rally that we saw in FY25, we thought that now at least there should be some cool off. But we already have had a 25% surge since the beginning of this new calendar year already. The way it has outperformed all the other asset classes is something to be really seen, to be believed as well. Gold prices, and in fact, Uday Kotak has tweeted today on gold, and I want to just quote him on that for all our viewers to see what some of our largest industrialists are really saying about gold. Uday Kotak has tweeted, and I say the same, and I quote him. The performance of gold over time highlights that the Indian housewife is the smartest fund manager in the world. Governments, central banks, economists who support pump priming, high deficit funding may need to take a leaf from India, a net importer of store of value forever. This is what he has tweeted just an hour back, and that's definitely the space that we need to do a lot of discussion on. Dharmesh ji, gold prices not stopping here. What exactly would you have to say?
Definitely, Sakshi, in the short term, it has run up too fast. And this is the nature of gold. I mean, if you look at, say, last 30, 40 years kind of a history, it runs up in phases, and when it does run, it runs really hard and covers a lot of our distance. So CAGR on a 10-year, 20-year kind of a basis is almost same as that I offer an equity return with high margin of safety. So equity return for Indian market has been 16%, gold has been 13%. And with this kind of a run up which is there, it has improved to 14.2% kind of a CAGR. So that definitely stands a chance. And with, I mean, three things are helping gold as of now. First is the entire global trade resetting and the imbalances which are happening. At the same time, with if the central banks are under threat in the US, where dollar has been a reserve currency, it's again getting a resetted. So there has been a sharp depreciation in dollar index compared to other currencies, which again helps and aids to the price of gold, like almost from 108 to 98. So 10% kind of depreciation has happened there, which in turn adds to the gold price value. Thirdly, all central banks in the world, including that of our country, India, they have been buying very aggressively gold for the last 3, 4 years. Post COVID, this phenomena has been observed. So they, apart from regular households, even the central banks have become a biggest consumer of gold, and the supply is limited. So demand is much more than the supply. So this is going to keep on getting the gold heated up. To my mind, if you are a bit medium to long term investor, when I say that for gold, it means at least 3 to 5 years. I see gold prices crossing $4,000 mark an ounce. So that is what it's likely to be. And then maybe it can take a pause for 5, 6 years. So that is how the texture is. Definitely in your portfolio, as we discussed last time, gold should be there. India, I mean, by default, you have gold in your portfolio, so no choice out there.
Yeah.
So better off,
Absolutely. So
yeah.
we do have some gold, but most of that gold is for consumption purpose at this point in time, rather than investment purpose. But at this point in time, when retail investors are thinking of gold as a clear investment, probably an asset class as well, would you really advise gold to be invested in at these sky high prices? And if at all, what is the strategy that you would advise?
So actually, the strategy would be SIPs rather than going in one shot as you do in
Yeah.
equity. So that's the best strategy. And I mean, 2 years back, you have seen what retail investors did to our market when they started funding the equities. Even now, they are the main stakeholders in this. Even in the falling market, their SIPs flows were intact, and that is what has given a flow to our market. And again, with slight, rebalancing coming from the FIs, we are seeing the good upturn in the market. I think this is likely to follow in the case of gold as well, particularly for India, where per capita income is increasing quite fast, and lower and middle income group are getting upgraded to a better income, disposable income kind of a scenario. And with this gold prices, seeing everybody has this craze for gold, so they are more attracted to gold or hard assets rather than fungible assets like equity. So, to my mind, even gold will see a consistent, run up. But the only way is do an SIP rather than going in one block.
Okay, do an SIP on gold. That's the best way for you at this point in time. Do not go all out at this sky high price as well. I think SIP strategy is what is being recommended here. Let's again look at how the markets are settling down in the pre-open trade today. Well, as far as the Nifty is concerned, the Nifty Bank is concerned, we've settled slightly higher than the flat line in trade, 55,414 on the Nifty Bank, 109 points higher in trade. When let's look at the Nifty as well to see how that one has also settled in the pre-open, and then we look at all the stocks that you need to watch out for. 40% higher, 24,185. Not too bad. So let's see what happens after three, minutes from now. But we do have a lot of stocks that are in focus today. Remember, banks will be in focus because RBI has eased the LCR norms versus the draft guidelines that had come in. So we'll be keeping an eye out on large private sector banks again, HDFC, ICICI Bank, Axis as well. We'll also keep an eye out on the PSU banks, the large ones, SBI, Bank of Baroda, PNB, Can Bank. Let's look at all of them. They should be opening higher today. Remember, results, of course, we'll be looking at how stocks are reacting to or probably, trading ahead of their results. HCL Technologies pointing to a start on the positive end, 0.8% higher. Havells about 0.8% up. Tata Communications also about 0.7% higher in trade. We'll also keep an eye out on Tata Elxsi. Remember, the stock really went up, smartly in trade yesterday. It's the new one in the FNO band, so keep an eye out on that one. Coal India, we'll keep an eye out on that one. The stock is opening about 1% higher in trades today. That's what is being indicated in pre-open. That's after the MOU has been signed with DCB to set up two plants of 800 megawatts each. So we'll keep an eye out on that. Earnings reactions, Mahindra Logistics will be in focus. Remember, the EBITDA has improved by 37% here. There is an indication of about a 6% uptick on this one from the earnings fact. We'll also keep an eye out Tata Power. Remember, with Tata Motors, it is going to be setting up 131 megawatt wind solar power project, so that will be in focus as well. Some of these stocks will be important to track in today as well. So we are going to be looking at a positive opening for the markets, and we will be definitely looking at how gold prices move in. Now, 99,000 rupees per 10 grams on MCX Gold. Viewers, we are just at a touching distance. It could be any time that we hit that 1 lakh mark on gold. Dharmesh, since we've been talking about gold, a 1 lakh mark, what would that mean for an average retail investor? Will it be touch and go? Will it sustain now above that 1 lakh? Will it be the new normal?
I think Sakshi is going to be a new normal. So definitely there will be some profit taking coming at this psychological mark. So people do tend to, and huge money has been made for retail investors who are actually trading in gold. So some profit taking definitely will be there, but I think slowly it will again climb back post 1 lakh mark very soon because how the global setup is, I don't see gold, fizzling out anytime soon.
Okay, got that. So that's something that we will definitely be looking at as far as gold is concerned. Let's wait for the prices to tick as far as the opening of the markets is concerned. And we will continue our discussion with Dharmeshri right after. So we have been indications of 24,150. That's how it has ticked at the opening trade, 0.1% higher, absolute flat with a positive bias on the Nifty. Let's look at the Nifty Bank as well because that was the leading index yesterday. Let's see how that one is also opening. Remember, we are just now flat with a positive bias on the Nifty right at open, 24,138. Let's also look at the Nifty Bank because that's one that's more important to really watch out for today. Whether it will carry on the momentum that it sustained yesterday, that's important to track. 55,414.2% higher in trade. That's something that we are going to be looking at even on the Nifty Bank, Sensex, even the small cap index and the mid cap index seem to be opening on a higher trade, about 0.3% higher for The Sensex are about 0.5% higher for the small caps and the mid cap index as well, 0.3% up in trade. Advances of 1308 to 304 declines. So we are actually looking at the market trend skewed towards the advances, and that's positive. Let's look at the gainers. So we have steel gainers coming in. Remember, because of that safeguard duty, Tata Steel, JSW Steel opening higher. Coal India also on the news flow is above, among the top gainers on the Nifty. You have Hindalco. You also have Eternal at 236 levels, 0.8% higher in trade. Then ITC, HDFC Life, Adani Enterprises are some of the other top gainers on the Nifty as we speak as of now. Banking gainers, let's look at some of the banking movers today: Federal Bank, Canara Bank, PNB, they're opening higher. HDFC Bank, Kotak Mahindra Bank, all opening up. Bank of Baroda also opening higher in trade. Those are some of the banking movers on the positive end. Axis Bank continues its move. SBI also, but IDFC First Bank is slightly muted in the morning trade as well. So that's how the opening has taken place today. Let's also welcome our other guest who's joining right in, Prashant Tapsi, Senior Vice President, Research Analyst at Meta Equities. Warm welcome. Good morning to you, Prashant. Good to have you with us. How do you sense the opening after yesterday's stellar move? Slight positives on the frontline indices. What exactly would you say?
I think good morning to everyone. Yesterday's rally was all because of the banking index. I think that has been the major driver for the market in the real times. But globally, again, things are very volatile. We have seen how U.S. markets have been not trading yesterday night due to the dialogues by Mr. Trump and even comments on the Fed chairman. But overall, I think Indian markets will be very much flat going forward right now, and more focus would be on the earnings, which will be due today from the IT pack. I think HCL Tech is going to give its results today. So I think that will be the more focus. Rest global markets volatility will be the concern for any profit booking attempt in Indian markets. But I am seeing very much positive until unless market stays above 200 DMI. I think the strength will continue and bank will lead the rally going forward.
Okay, banks will definitely lead the rally going forward from here. Dharmesh ji, opening slightly on a higher note, do you think yesterday's move will have some difficulty in sustaining, looking at what has happened globally overnight?
No, I don't think so. I mean, some consolidation does happen after a sharp run up. It's a natural kind of a consolidation which market is seeing as of now, and as earnings get discounted, so traders, quick money, hot money will definitely have some profit taking. But the type of opening which is there, I don't think. I mean, participants are in a mood to run away soon, so they are likely to stay. Even the hot money or the traders kind of bracket. But from investment perspective, I still think there are a lot of legs in this market, particularly on much of the large cap names. Banking space is the front runner, but if you look at defense space, railway, infra, even Reliance Industries, these are spaces where which will provide strength to the market and where the valuations are still very comfortable and a lot of distance can still be covered just to make it rich in the valuation metrics. So 5-10% upside likely on each of those stocks.
Okay, fair point. We are looking at some block deals take place right at the open. I think RBL Bank has seen huge block deal, 3.8% of an equity exchanging hands. There are news reports which are unconfirmed, of course, as of now, that indicate that British International Investment is likely to have sold its entire 3.8% stake in the block deals as well. That's what is being indicated. The stock is slightly down in trade after that big block deal that's taken place, 2.5% lower, is something that we are looking at in terms of the RBL Bank stock at this point in time. We will continue to look at it as well. But let's look at the steel stocks. I think those are the ones that are very important to watch out for. Safeguard duty impact across the board. We are seeing some positivity. JSW Steel, Tata Steel, Hindalco, all of them are up and about. Dharmesh, what's your sense on the metal stocks with the safeguard duty in place?
Yeah, so that's a positive trigger for the metal space. They have been, asking for it for a long time, and with the kind of developments happening overseas,
Yeah.
Sakshi, I don't think it would be continued because steel prices globally is far depressed.
Okay, let's ask Prashant. Prashant, what's exactly your view on the metal stocks from here on after the safeguard duty has been put in place? How will this impact some of the steel stocks there, and what should be one's approach?
The approach should be positive. Again, Indian government is not trying to safeguard the Indian manufacturers, but this was very clearly expected in the tariff war. So I think the production of steel from the China will obviously be going to any other countries, and India being the side countries for China, I think dumping was expected in the Indian markets, and obviously government has taken a right proactive step to safeguard. And in this case, I think Tata Steel and the sale would be the right candidate for anyone who would like to take a call at this point of time. I think downside is very protected in Tata Steel. 130 can be a downside limited stop loss for that, and the target can be anywhere between 150 and 160 for short term.
Okay, got that. So that's as far as the metal counters are concerned. Let's also look at how some of the other pockets are moving in trades today within the markets. Let's look at how the entire setup in terms of the sectoral action is panning out today. Of course, we have been marking some sectors like banks that are in focus. I think today India will be down by 2%, so that's also positive. All the sectors seem to be opening slightly higher in trade, and that's also positive, barring autos that are slightly lower, IT 0.7% of a decline, pharma, private banks now flat with a negative bias here, healthcare index 0.2% lower. So it's a mixed trend is what I would call it at this point in time. Metals are soaring 0.7% up, PSU banks rallying half odd percent higher, realty up by 0.4%, consumer durables 0.4% higher in trade. And some of the others like financial services are also moving up. But definitely today it's the PSU banks that continues its move on the higher side. Dharmeshji, we have discussed private sector banks, which you said that one can actually continue to hold on to their positions. What about PSU banks? Is this the time to again go back and look at what the PSU banks are doing at this point in time? Do you think the benefits will also accrue on this space?
Yeah, definitely, Sakshi. Even if you look at the numbers for the last year, they have performed better than private sector banks on the advances growth number. In an average of from 12 to 13% kind of advances growth has been there. Deposit growth has been 9-10%. But the NIMS has been stable and asset qualities have been far better than what they used to be, I mean, 5-10 years back. So there's been consistent asset quality improvement in all the PSU banks. Digitization and flow of technology into the banking sphere has been quite fast, and the penetration is quite fast in the PSU banks.
Mm.
I think the valuation differential which is there between private and public sector banks is likely to be bridged this year. The regular business traction which they are seeing, and they are well capitalized. I mean, capital adequacy ratio of all the PSU banks is far better off, along with the CD ratio, that is the corporate deposit deposit ratio. So all factors are in favor of PSU banks. We are seeing the price traction of late faster, but to my mind, post Q1 earnings Q4 earnings are announced, and with the good monsoons in place, this valuation gap which is there will be bridged, and that itself will give you 20-25% kind of upside on most of the PSU banks. So the basket remains clear, which we have discussed, like Bank of India, Bank of Baroda, Canara Bank, PNB. These are the basket. I am just keeping SBI aside because valuation metrics is trading at 1.5 times price to book, far away from other PSU banks which are sub 1 time price to book.
Fair point. We'll keep an eye out on that. Dharmeshji, thank you so much for being with us in the
Thank you.
morning edition and helping us with all your insights. Always a pleasure to speak to you. Viewers, we'll continue our conversation
Thank you
with
so much.
Prashant now. Prashant, you were also talking about how banks could be particularly leading from here on as well. What exactly would you say when it comes to the choices in the banking story? How does one really decide between the large cap private sector banks, ICICI, HDFC, those that have posted better results than estimates just recently? Or should one really look at how comforting the valuations of large PSU banks are at this point in time as well, financials too? What is the best way to approach all these three segments? Do you have particular stocks from each of these three segments that investors can continue to look at even after the recent recovery?
I think yes. See, there is a good gap between valuations between the private banks and the PSU banks. But when we compare private banks to PSU banks, and there are some stocks like Kotak Bank, Federal Bank, these two stocks in the private sector still have not performed in the recent rally. So I think if anybody would like to have a private bank in the portfolio at this point of time, I think Kotak Bank and Federal Bank, these two stocks should be try to trade at these levels. On the valuation side, again, very comfortable to have Kotak at this point of time, again, even Federal. In the PSU banks, I think SBI is the one exceptional case, but if you see PNB Bank, if you see Canara Bank, if you see even Bank of Baroda, the three stocks also looks good for me at this point of time. Valuations are comfortable. Plus, what I'm expecting is the consumption story, which is going to start this April, the 12 lakh and below no tax. So I think that will all will have impact in the banking space, and government PSU banks will have a lot of credit growth going forward, and even housing sector will always be on the top-notch approach for anyone to have take loan and all. So I think PSU banks with respect to housing sectors, I like Bank of Baroda, SBI, PNB at this point of time. In the private space, Kotak and Federal Bank.
Okay, got that. So that's as far as the banking space is concerned. Viewers, we'll also now focus on the IT pack. Remember, HCL Tech comes out with the numbers today. Let's see what the big expectations there are and what should be the approach. We've already seen TCS, Infosys, Wipro come out with the numbers there. Now it's about the fourth big one, and that's HCL Tech. It's trading about 1% lower, ahead of its earnings that will come in after the market hours today. Of course, there is an expectation of slightly muted number on both EBIT, revenue, as well as the profitability as well. But what I said that will be important to watch out for is the commentary on the outlook going forward from here amidst the macroeconomic uncertainty, the commentary on discretionary spending, the deal pipeline. Hiring trends is going to be extremely important. Remember, TCS did talk about how they are going to be postponing the wage hikes as of now at this point in time. Instead, they just doled out a big dividend for their shareholders, and that was more important than the employees in this quarter. That was the clear trend that was deployed. Let's understand from Prashant what exactly should one's approach be on the IT pack. Despite slightly softer earnings and outlook from Infosys, we saw IT Pack also rallying in trade yesterday. Was it just for the momentum and riding on the high hopes of the entire market yesterday? Or do you think there is still need to be a lot of caution that needs to be had on the IT Pack right now? Prashant?
I think two sectors, one is IT and pharma, these to be traded on a very cautious note only. All the three companies, major companies, have given a very muted and very decent numbers, but again, the commentary as well as the guidance were not so no encouraging to the market. So I think even HCL Tech will do the same kind of commentary as well as the guidance. So I think overall on price action, HCL Tech again it is at a make or break level. So if it crosses above 1500, then only some kind of positivity will come into the stock if there is some surprise in the earnings update. But overall, IT pack, I think we should be cautious. We should wait for at least full quarter earnings, Q1 earnings of this financial year. We should watch and then take a call on that on a long-term basis. But time being, if someone would like to have a call, I think TCS is the only stock which can be focused on the IT sector.
Okay, forgot that. So that's the view that's coming in as far as the IT pack is concerned. How about the mid-cap IT names now? We saw Tata Elxsi rallying in trade yesterday. Many of those stocks also saw the rub effect. Like Coforge, Persistent, all of them also seeing some trends on the higher side. What's your view on the mid-cap IT names right now?
So when we compare mid cap and large cap, there is some kind of comfort level in the valuation side. That is the only reason why the IT focused traders or IT focused funds are now chasing these mid caps companies to have some kind of short term momentum in the stock. So only that would be the only reason. Even Tata Elxsi, I think the numbers were really good. I think there was some kind of surprise. So that made the stock go up by 5-10% yesterday. But I think again going forward, earnings would be highly focused. HCL Tech will drive the future earnings.
Okay, got that. Earnings is going to be important to watch too. Let's also look at some of the other pockets. Let's actually look at the broader index to see how things are shaping up, especially when we talk about the Nifty 500 names. Flat to a positive bias on the index level, but let's look at some of the stocks there. How are they moving? Do we have any stocks with strong moves? We have Raymond, 5.5% higher. Acme Solar, 4% up. Anant Raj, 4% higher in trade post earnings. KFin Tech about 4% up. Eternal is rallying now, 236 is the level at which it is trading at. Premier Energies and Vari Energies also up by about 3.5% each. Transformers and rectifiers is also another one that's moving up. Dixon Technologies is also up and about in trade. So EMS play, solar play, wind energy also moving up, just like how yesterday we saw some of the moves there. New age internet stocks, both Zomato, that's eternal delivery, that also continues to be on the positive side. Let's talk about each of these segments. Let's start off with the wind and the solar names there. Prashant, anything interesting in this space? There have been some flyaway moves even yesterday on names like Inox Wind and Suzlon. Today it's like spreading across to the solar names as well. What exactly would you be really looking at in this space? How would you approach it?
So now at this point of time, I think earnings should be focused and technical structure should be focused. Suzlon is really good at this point of time. I think 62 is a trigger point where we can get some kind of a breakout which can take the stock towards 70, 72, 75. So I think in this space, in the renewal space, I think Suzlon is the only stock which I am very much comfortable, not on the valuation side, but on the technical chart patterns.
Okay, got that. So that's the view on the wind and the solar names. Now, Suzlon is trading above 60 odd levels at this point in time. The other pocket that I marked out was the EMS plays, the erstwhile favorites, Dixon Tech Gains. They are also coming back in focus. Do you think the valuations are more comfortable at this point in time, or do you think after the recent recovery again it's getting into a little uncomfortable zone for fresh investors?
So in the tariff war, I think India is placed very safe, and I think the way how US is going hard on China, so a lot of facilities, so a lot of orders may shift to India to manufacture these EMS product to the world. So I think that is the one reason why the outsourcing model companies like Dixon, Amber Enterprises, other EMS stocks are looking really good at this point of time. Valuations are still again expensive, but I think there is a good earning visibility for at least for not 2-3 quarters. So that is giving investors or traders very comfortable to buy and take the stock for next 10-15% return from the current levels.
Okay, fair point. So that's as far as the space is also concerned. Let's also pull up some of the other stocks that we were marking here. Let's talk Anantraj. That's something that we wanted to discuss with you. Post the earnings, another 4% up. Remember, both NetWeb and Anantraj in the recent past had corrected because of the DeepSeek news. But finally, gradually, they are coming back into focus as well. Anantraj also posted its results yesterday. Any view on this one, post the results?
I think there was some expectation of a very bad number from Anantraj, but it was surprised to see a neutral to positive earnings show. So that was one trigger. Again, technical structure also looks very good. I think a 50-day DMI, which is around 528, which is very near from the current levels. I think that will also be achieved very soon. So overall, fundamentally, things are very good at this point of time. Expectation was very bad, but the numbers when we see yesterday, I think that is giving a lot of comfort levels. And valuation, obviously, near to 40p and price to book earnings around 4. I think some kind of comfort level is going to start at this point of time. And a good target can be expected from the current levels. Short-term target would be anywhere between 600.
Okay, got that. Let's also talk about Zomato. That's another one that's, let's discuss Eternal. 236 right now. It went past 243 also this morning. What's the sense that you have on this one? It's, again, bounced back from what 200 odd levels slowly and gradually, and it's now, hovering around 230 odd levels. What would you say on Eternal? Still some, way to go. Should one look at it afresh or no?
Yes, fresh. I think both by fundamental story as well as technical structure, both are giving very comfort levels to have a fresh position in this Zomato. Fundamentally, I think due to this heavy summer, people are not going out and everything has been ordered on the Zomato. I think that will drive some kind of order book for the Zomato going forward. So another 1 month, 2 months, there will be huge orders for Zomato as well as Swiggy to get some kind of order delivery. So that is one reason why I am very much positive from 220 and now almost it has crossed to 40. So my target would be anywhere between 260 and 280 by another 1 month position from the current levels. Technically, it has crossed 50-day DMI and even 200 DMI, so giving us a lot of comfort levels to have a fresh position at this point of time. Any stop losses should be a 200 DMI, which is at 228. That should be act as a stop loss for the stock, and target should be 260 to 80.
Okay, got that. So that's the the view that's coming in on Zomato as well. First 15-20 minutes out on the markets. Let's again look at how the trend is shaping up across the board. Let's also focus a bit on the small caps and the mid cap space. I think that's doing much better than the front lines today. Small caps, you have a lot of names. Some of them may be repeat from what we discussed in the Nifty 500 basket, but many others are also pulling up in pace. Data patterns, RT Industries, International Gemological Institute of India, First Cry, Five Star Business Finance, IFL. These are some of the stocks that are moving up. GSPL, MGL, Angel One. That's also moving up. Let's discuss this basket now, Prashant, with you. The capital markets related stories. I think FinTech moved up yesterday. CDSL, Angel One, 361 WAM is among the top movers because of the news flow as well today. The entire space seems to be like in thick zone. What would you say on this one?
Yes, I think see they were after watching Angel One's results, things were somewhat in the bad shape. But again, same day Angel One recovered, and that gives some kind of comfort level all the capital market stocks. But overall, markets in the last 15 days have been in the green zone, so that is giving investors as well as the business model to have a very positive impact. So I think Motilal Oswal as well as Angel One, they are driving the capital market index as well as the stock. But overall, I think still valuations are very much in a comfort level. If we assume a proxy for Indian markets, I think these are the stocks one should focus more. CDSL, Motilal Oswal, Angel One, JM Financials, Nuvama and all. I think these are the stocks one should focus more if you see a proxy for Indian capital markets.
Absolutely. So we'll definitely keep an eye out on that as well. Let's focus on some of the other pockets too to discuss with Prashant in trade today. A whole host of focus also, like we've discussed, is on the banking story because of the LCR norms today. We have discussed that. Let's look at RBL Bank again. Remember, there was this block deal that we marked out. Now I think the bank is turning green. It was down by 2.5%, or it's kind of digesting the news. It's 5% off the lows that it has set it in page two. Also, let's focus on some of the other pockets. Let me just pull up some interesting names for all our viewers from the Nifty next 50 names now. Yes, we have Lodha. We have some interesting names like Indigo that's opening higher again, about 1.5% up. It's trading up. Indigo is an interesting one to discuss. 5,500 levels and beyond. It has been a stellar outperformer of the recent past, Prashant. We've been discussing this. What exactly would you foresee from now onwards for Indigo?
I think we have seen how they are busy, flying out. I think every aviation is now making a lot of capacity utilization. So overall, with respect to the earnings, I think even that is going to drive this stock more towards 6,000 levels from the current level. Very positive. I think the way how numbers are coming out with respect to the airport numbers. So I think that is giving a lot of visibility of earning where the market share of Indigo is almost like 60% plus. So very positive. Structurally, still technically, I think there is some kind of overbought zone, but I think that will continue towards 6,000 from the current level. Technical structures are very much strong. I think earnings will be the only way where if there is something negative in the earnings, then only things can come down on a profit booking level. But overall, very positive on the stock with a target of 6,000.
Okay, got that. So that's the view that's coming in on this space too. Apart from this, Prashant, is there any other space that I missed asking you that you believe one should definitely keep an eye out on in terms of a sector? Is there a re-rating of sorts going to be in place in the ongoing recovery in the markets?
I think yes, again, the summer theme which we have discussed many times, even Voltas is still looking very good at this point of time, and we can expect at least 100 rupees momentum in the current levels. The way heats are expanding, I think sales will obviously be have in that. Even EPAC durables will also be a stock one should focus more on. So these are the two stocks I am focusing on the summer theme, and even the power stocks, Adani Power and as well as Tata Power. These are the two stocks again one should focus more on in the summer theme. So these are the four stocks I'm talking from last 2 months, and they are performing well.
Okay, got that. So that's the view that's coming in. Let's also discuss since you're talking about summer, let's talk about monsoons as well. I think that's also going to be in focus because IMD is now expecting that above normal rainfall could be coming in, about 60% of chances for an above normal rainfall. How would you look at fertilizer, agri, irrigation, these kind of names? Do you think that at least positional trading can actually take place in these particular stocks with that expectation in focus?
I think already the rally has happened in these stocks, but again, still, if you focus on the Q1 earnings, when which will be out in the July season, so I think considering that again, fact, Chambal fertilizers, these two stocks looks good for me at the current level, but again, upside will be very much limited, but rallies already happened in the stocks.
Okay, fair point. That's the view that's coming in. As far as the space is concerned, let's also look at some of the other aspects in the markets now. Let's pull up some names for to discuss with Prashant. Now, let's look at the mid cap basket as well to see if there are any interesting names. Yes, there are. Premier Energies and Bari Energies, both in focus in trade today, both up by about 4.5 to 5.5% higher in trade. Particularly on these two names, what do you have to say, Prashant, Bari and Premier?
I think Premier is better in terms of valuation, but again, both valuations are expensive right now, almost trading at 70x P, which is not a comfort level to say go and buy this stock at this point of time. But again, if you compare both, again, Premier looks good on charts, and Vare again still I think recently crossed its 200 DMI. So that could be a stop loss for the stock, and then one can have a trade. But it's a portfolio stock, not a trading stock for me currently. So anybody would like to have the solar panel as a portfolio stock. So I think these two stocks should be the part of that portfolio, but on a long-term basis.
Long-term basis. Okay. We also have Havells results today. Both Havells and Polycab are trading positive, ahead of Havells results. Remember, this space has been a very, very volatile space to be in the recent past, but they've also been wealth creators of the, far side past that we have actually seen. What exactly would your fresh approach be on these cables and wire segments, Polycab, Havells, KEI, right ahead of their earnings? What should one expect from these stocks?
Very positive. So there were two, three opportunities when Adani declared to enter into this space. There was an opportunity of 20% downside
Yes.
on this stock. So I think that was an opportunity, but now I think the stock has already recovered from the lows. So not fresh. I'm not advising any fresh position in this stock, but obviously portfolio stock should be Polycab, Havells as well as KEI. If there is a trading opportunity, I think KEI has some kind of cream left upside for at least 5-10% from the current levels. So between Polycab, Havells, and KEI, I'm a bit positive on KE at this point of time, considering the chart patterns.
Okay, fair point. We'll definitely keep an eye out on that as well. But Prashant, just wanted to get a sense on how, we began our conversation in this fresh year, 2025, that it could be a year of large caps, and that's what the focus should be. Of course, so far in the recent recovery in the markets that we've seen is that the large caps have taken a lead, no doubt about that. From here onwards, but do you see any scope of mid and small caps also gaining some favor back yet again? How would you approach both large caps vis-a-vis the mid and small caps right now?
Large cap will continue to perform, but the upside would be limited from the current levels because I think last 3 months, 2 months, almost 12 to 15% rally has been taken in the large caps. Mid cap and small cap, obviously, one should wait and watch for the Q4 earnings. That will give us some kind of comfort. If Q4 earnings is better than Q3 earnings, at least neutral to positive, then only some kind of more interest can be driven in the mid cap and small cap companies. And I will be again wait and watch, having a wait and watch approach in Q1 financial for this financial year because until unless there is some kind of clarity in the earning growth, then only one should have a very positive view on that. So time being, my focus would be more on large caps. Large caps, those still have not performed. For example, SBI, the other large cap private banks are trading at all-time high, but SBI being a large cap in the PSU, but still it is not near the all-time high. So I will be focusing more on the large cap only, those stocks which have not performed well in the last 15-20 days trend.
Okay, fair point. I got that also from Prashant as far as how large versus mid and small caps should be played too. at this point in time. Let's also focus on some of the other laggards today. Autos continue to be a laggard. Prashant, what do you think is continuing to be a big bother or a worry for the auto space right now? What exactly would your approach be on the auto space?
I'm a bit positive at the current level. Again, Tata Motors, Mahindra and Mahindra, these are two picks from our institute. So I think the worst is behind us, and nothing is bad in terms of global issues. So I think downside is protected currently from the current markets, and Tata Motors and Mahindra and Mahindra, this can give some kind of very decent returns from the current levels. Hoping so, the consumption story, people would like to go with the four-wheeler with the loan structure. I think that will have some kind of very aggressive support, and a lot of banks have reduced their interest rates, so that will have some kind of positive impact on the stocks. If you see Tata Motors from last 15 days, it has recovered from its low, and I think the target of almost 690 and 700 can be looked at for at least 1 or 2 quarters from the current levels.
Okay, fair point. We'll definitely keep an eye out on that too. Prashant, we'll thank you then on that note for being with us in the morning edition and helping us through the morning half an hour of show, navigating several stock ideas for our viewers too. Hope you have a great time till the time we see you next in another edition to scout some more ideas. But I think while markets are just finding their feet today after yesterday's stellar move, amidst all the global uncertainty, it's gold that's going to be hogging all the limelight yet again today. Near 1 lakh mark is what we are seeing, 99,000 already on the MCX, and we'll see how that gap will be closing in very, very soon. At this point in time, because it's been a stellar move on gold and that continues, and we will be keeping a keen eye out on that throughout the course of our day. Thank you so much, Prashant, for being with us on the morning edition. Let's start wrapping up the morning 45-50 minutes of trade that we have actually seen right from pre-open up until now. So you can actually see a 24,180 kind of a move on the Nifty, 0.25% up. That's just a 56-point higher move on the Nifty. Let's look at the Nifty Bank, the hero of yesterday. That continues to move up that higher, about 0.5% up, 55,605. Remember, these are record high levels for the Nifty Bank. 300 points up in trade, so it continues from the move yesterday. Sectorally, the action continues to be on pockets like banks we have discussed. Apart from this, we'll also look at several other pockets. The broader markets are doing better than the benchmarks, 0.6, 0.5% up in trade. Among sectors, you have move on metals, 0.7%, FMCG coming back, 0.5% higher, realty also up in trade, consumer durables up in trade, financial services up in trade. But private banks are slightly soft. You have IT about 0.7% lower, auto down in trade, pharma also down by 0.25%. So it's a mixed trade as far as the space in the sectors is concerned. Top stocks on the Nifty, Eternal, 2.7% higher in trade. You can see a 236 kind of a level on this one. Kotak Mahindra Bank, HDFC Bank, BEL, and also names like Tata Consumer, Tech Mahindra, ITC among the top movers. On the lower end, you have names like IndusInd Bank that is giving up some of the gains of last few days, 3% lower. Hero Moto, Bajaj Auto, Infi, Power Grid, Bharti Airtel and Jio Finance seem to be the ones that are not really participating in the rally, in the recovery rally today. That continues. On the mid-cap space, you have names like Premier Energies, Vari Energies, Dixon, SJVN, Max Health, Motilal Oswal Financial Services, NHPC, whole host of these stocks also up and about. But Idea is down in trade. Remember, yesterday there was a very strong move on Vodafone Idea, Biocon, BTL, Sona Comstar, Suzlon. These are the stocks that are actually lagging behind in trade. All right, viewers, what we'll do is we'll wrap up the morning edition right here, but do stay tuned on to Business Today Television. Whole host of market moving news up for you to really track. I'll be back at 12 noon to discuss your stock ideas and your stock queries with top market experts. And of course, we will also host a special show on gold today in case you're still wondering what exactly should your approach be. There will be a gold panel discussion that we will host at 1 p.m. So stay tuned for that too. Many thanks for joining in.
arrival of JD Vance in India on Monday morning kicks off a week of unprecedented